Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we're diving into one of the most exciting battles in the tech world, AMD versus Nvidia in the AI chip market. As AI continues to revolutionize industries, these two giants are racing to dominate the space, and the stakes couldn't be higher. But what does this mean for investors like you? Could AMD be the sleeper stock that outperforms its heavyweight rival? Stick around to find out why AMD might just be the investment opportunity you've been waiting for. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. Nvidia has long been the leader in supplying graphics processing units, or GPUs, for artificial intelligence, AI workloads within data centers. Their GPUs are renowned for their high performance and have been the backbone of AI processing for some of the biggest tech companies globally, such as Microsoft and Amazon. Nvidia's sales have been soaring, driven by the relentless demand from these tech giants. But the landscape is evolving, and AMD has emerged as a formidable competitor, shaking up the status quo in a market once dominated by Nvidia. Advanced micro devices, commonly known as AMD, has started to capture attention in the AI sector, especially with its new data center GPUs. These products have not only garnered interest, but have also started to attract some of Nvidia's most valuable customers. What's fascinating is that AMD isn't just focusing on the data center market. It's also making waves in AI-enabled personal computers. This dual strategy is positioning AMD as a leader in various segments of the AI chip market, offering both high-performance chips for large-scale data centers and powerful processors for individual PCs. Currently, AMD stock is trading at about 29% below its all-time high, a level that might make some investors hesitant. However, AMD's recent financial report for the second quarter of 2024, which ended on June 30th, paints a different picture. This report suggests that AMD is making significant strides in the AI market, making it a potentially attractive buy for investors at this time. Let's start by discussing AMD's rise in the AI chip industry. Nvidia's H100 data center GPU has set a high benchmark for AI development, but AMD isn't sitting idly by. Last year, AMD launched its MI300 lineup, which is designed to compete directly with Nvidia's offerings. The MI300 series includes the MI300X, a pure GPU, and the MI300A, which is an accelerated processing unit, APU, that combines GPU and CPU hardware. The response from the market has been overwhelmingly positive, with many customers citing both performance and cost advantages in favor of the MI300X over Nvidia's H100. But before we proceed, here's a quick question for you. What's your favorite under-the-radar stock that you think could give AMD a run for its money in the AI chip market? Comment your thoughts below. In the second quarter of 2024 alone, AMD's MI300 sales surpassed the $1 billion mark for the first time, and the company subsequently raised its full-year sales forecast for the MI300 series to $4.5 billion, up from $4 billion just 3 months earlier. This rapid increase in sales and optimistic forecast reflects the growing confidence in AMD's AI capabilities. Some of AMD's key customers include tech giants like Microsoft, Oracle, and Meta Platforms, all of whom also purchase chips from Nvidia. This demonstrates that AMD is successfully penetrating Nvidia's customer base, which could be a sign of more significant shifts in market share in the coming years. However, AMD cannot afford to be complacent. Nvidia is already preparing to launch its next-generation chips based on its new Blackwell architecture. These upcoming chips are expected to leapfrog the MI300 in terms of performance, which means AMD will need to keep innovating to stay competitive. In response, AMD has announced plans to release its MI350 series in 2025. This new series will be built on AMD's Compute DNA, CDNA 4 architecture, and promises to deliver up to 35 times more performance than previous generations based on CDNA 3, such as the MI300. The MI350 will go head-to-head with Nvidia's Blackwell-based chips, setting the stage for an exciting competition in the high-performance AI chip market. But the data center market is only one aspect of AMD's AI strategy. The company is also focusing on the personal computer segment with its Ryzen AI chips. These chips enable personal computers to handle AI workloads directly on the device, allowing features like chatbots and virtual assistants to be integrated more seamlessly into applications. The ability to process AI tasks on device means that queries no longer need to be sent to an external data center, resulting in a much faster user experience. This capability is especially important as the demand for AI-enhanced applications continues to grow. Earlier this year, AMD announced that millions of PCs had already been shipped with its Ryzen AI chips, giving the company a staggering 90% market share in this niche. But AMD is not stopping there. It is expanding on this dominance with the new Ryzen AI 300 series, specifically designed for notebook computers. The Ryzen AI 300 series is now the fastest neural processing unit, NPU, in the industry, further solidifying AMD's leadership in this market. The first notebooks equipped with these chips went on sale just last weekend, and AMD has revealed that over 100 platforms are set to launch with Ryzen AI 300 series chips in the coming quarters. These platforms will come from leading notebook manufacturers like HP Inc., Acer, Asus, and Lenovo, among others. Now let's take a closer look at AMD's financial performance, particularly in relation to its AI initiatives. In the second quarter of 2024, AMD generated $5.8 billion in total revenue, representing a modest 9% increase compared to the same period last year. On the surface, this growth might not seem extraordinary, but the real story lies in the performance of AMD's key business segments. AMD's data center segment, which includes the MI300 GPUs, saw an incredible 1 to 15% year-over-year increase in revenue, reaching a record $2.8 billion. This surge was primarily driven by the MI300's strong performance and the growing demand for AI processing capabilities in data centers. Additionally, AMD's client segment, which houses the Ryzen AI computer chips, generated $1.5 billion in revenue, marking a 49% increase year-over-year. These two segments are where AMD's AI strategy is making the most significant impact, and together they account for 74% of the company's total revenue. However, it's worth noting that not all of AMD's business segments are experiencing the same level of growth. The company's gaming and embedded businesses have faced some challenges. The gaming segment, for example, saw a 59% decline in revenue compared to the same period last year. This decline is largely due to a slowdown in demand for gaming consoles like the Sony PlayStation 5, as the initial surge of console sales has tapered off. Similarly, the embedded segment, which includes chips used in various industrial applications, experienced a 41% drop in revenue due to high levels of existing inventory. Despite these challenges, investors should keep their focus on AMD's data center and client segments, as these are the areas where the company is likely to see the most explosive growth driven by AI. So, why should investors consider buying AMD stock on the dip? As mentioned earlier, AMD has raised its 2024 forecast for data center GPU sales to $4.5 billion. While this figure might seem substantial, it's only a small fraction of the potential opportunity in the AI data center market. Nvidia's CEO Jensen Huang has predicted that data center operators will spend an astronomical $1 trillion over the next 5 years to meet the growing demand from AI developers. This massive investment highlights the enormous growth potential in this market. AMD is just beginning to establish its presence in the AI data center market with the MI300, but as it introduces the MI350 next year, it is likely to capture even more market share from Nvidia. If AMD manages to secure even a 10% share of this $1 trillion market, the growth in its GPU sales could be staggering. This scenario presents a compelling opportunity for long-term investors who are willing to ride out the volatility and hold onto the stock for the next few years. That being said, it's important to acknowledge that AMD's stock is not exactly cheap at the moment, even though it's trading 29% below its all-time high. Based on its trailing 12-month non-GAAP adjusted earnings of $2.78, AMD's price-to-earnings ratio stands at 52.5. This is significantly higher than the Nasdaq 100 index's PE ratio of 30.9, suggesting that AMD stock might be overvalued based on its current earnings. However, the outlook becomes much more favorable when we consider AMD's future earnings potential. Wall Street analysts predict that AMD will generate $5.51 in earnings per share by 2025, which would bring the stock's forward PE ratio down to just 26.4. This indicates that the stock could be much more reasonably valued if investors are willing to look beyond the short-term fluctuations and focus on the company's long-term growth prospects. Furthermore, it's worth noting that AMD's market capitalization currently stands at around $236 billion, which is less than 1/10 of Nvidia's $2.8 trillion valuation. Given the quality of AMD's products and its ability to sell to some of Nvidia's biggest customers, There is a strong case to be made that AMD's stock has the potential to deliver more upside than its rival from this point forward. Taking a closer look at AMD's stock performance, the current price sits at $134.57 with a slight daily dip of 1.3%. However, don't let that minor decline fool you. The company boasts a substantial market cap of $221 billion, indicating its strong position in the semiconductor industry. With a solid revenue of $22.68 billion and a gross margin of 40.60%, AMD is clearly delivering value despite the recent fluctuations. These numbers highlight AMD's potential for long-term growth, making it a compelling option for investors looking to capitalize on the evolving AI and tech markets. In conclusion, AMD is making significant strides in the AI chip market, with a growing presence in both data centers and personal computers. The company's MI300 series has been well received, and with the upcoming MI350, AMD is positioning itself to compete even more aggressively with Nvidia. While the stock might seem expensive based on current earnings, its future growth potential, particularly in the AI segment, makes it an attractive option for investors willing to take a long-term view. Before we wrap up, let me leave you with this. If you had to choose, would you bet on the giant or the underdog in the next big tech wave? Drop your answer in the comments, and let's get the conversation going. Thank you for watching Simple Investing Secrets, where we bring you the latest insights and strategies to help you grow your net worth. If you enjoyed this video, please like, subscribe, and hit the notification bell so you never miss an update. Remember, this video is for informational purposes only and does not constitute financial advice. Always do your own research before making any investment decisions. Let's wrap things up here, and we'll see you in the next video. Happy investing.